Well, good afternoon, everyone. I hope you guys are all having an amazing day. Thank you so much for joining us today. I have this special guest on here. My partners, Miguel and Zahira, and they are the experts when it comes to life insurance and financial policies. So all of you guys know me from, workers' comp, commercial. That's all I do. I just write commercial insurance for contractors and staffing agencies. But I partner up with individuals such as Miguel and Zahira who are experts in their field, and they're able to dive into all that has to do with that specific industry. So I'll let Zahira and Miguel introduce themselves.
Hi, my name is Zahira, or people call me Zahira, Zaida, anything.
Z.
Z. We are a husband and wife team, and we're pretty passionate. I'm a realtor as well, but I also help all my clients with their financial planning. And so we partner together with my husband, along with Rocio, to help people with everything that has to do with planning their life, their structure, their life insurance policies, so that they can have peace of mind moving forward.
Hi, my name is Miguel Pivaral. She already explained everything from us. I've been working in insurance since 2017, and I really like to help people still learning about the industry. But it's an honor to be here with Rocio and trying to help you guys and any questions that you may have.
Awesome. And then, guys, you guys are going to get used to Miguel and Sahara because they're going to be on here on a monthly series. And we're also going to be doing this in Spanish because all of us here are, well, all three of us here are Hispanic, and we also, we're also bilingual. And a lot of my viewers on Instagram are also Spanish speakers, and they have asked me to do my series in Spanish. So that's one of the features that I will be bringing on to you onto my platforms. And I'm very happy to have people like Sahara and Miguel who are both bilingual and definitely speaks better Spanish than I do. So next week, porque a veces me trabo cuando estoy diciendo las palabras en inglés y español, and there's a lot of transactions here.
English.
So definitely be nice to me that day. But so let's go on and let's talk about life insurance for business owners. So when it comes to running a business, we know how important it is to protect your business. We have workers' comp, excess, commercial auto, but what policies do you guys see? Do you guys see that business owners, that if you guys were to recommend two policies, what two policies would you recommend to business owners?
Well, pretty much what we help business owners structure, first of all, is the business side, policies for the business side of their, obviously their business, and then the personal family side. So those are the two main issues that we would have to deal with and try to figure out what is recommended depending on their needs. For example, in the business side, if you are in a partnership in your business with someone else, you might need a buy-sell agreement and fund it with a life insurance policy. Or you might have very specific key employees, including yourself, that if something was to happen to them, then your business might tank. So then you could put a key man insurance on that person to help the business. That's more on the business side. On the personal side, it would be more like having the analyzing each family situation and figuring out what type of protection the family needs, including the main breadwinner.
Yeah, it goes case by case, definitely, because there's policies, permanent policies, and term policies. So all depends also how the business is, how much costs the business in total, how much coverage they will need to cover the whole business in case something happened to the partner. Their partnership with 2 or 3 people, and this is a case by case. Yeah.
Okay. Can you guys dive in a little bit more about like buy-sell agreements? How does that work? Because I've had, several business owners tell me like, if if me and if my brother were to die, I don't have anything, or God forbid, my brother gets into a divorce, and then what if the ex goes after us? Then we're not protected. So in an instance like that, will a buy-sell agreement come into protection?
Yeah, so a buy sell agreement is pretty much you and your partner, two or three, whatever, how many business partners there are for the business. You'd have to sit down with an attorney and figure out what are going to be the terms of selling or passing on the shares of that partner should something happen to that partner. And then in that, but it's almost like a business trust, living trust kind of thing. You set up the like a will, or what would happen, and what would the instances be of every scenario, if there's a divorce, if there's this, if there's that, and then what will be done in that scenario. Now, where the life insurance comes in is that, say, for example, if you have sections on that buy sell agreement, where if something was to happen to the partner, say they pass away unfortunately, or they are completely disabled and they can't come back to the business, like what happens to the shares of that person, and if they have to come out of the business, then the life insurance policy would kick in to buy that partner out of the business, and then pass on the shares to that person, to the other two or remaining business owners of that company.
Yeah.
Okay. And with that, so like let's say um if someone has families, like let's say it's a brother, it's a family, and it's two brothers, and then these two brothers have children, and both children want to come into the business. But if the brother, let's say this brother has owns 30%, and then this one owns 70%, would that buy sell agreement also have that written, like, okay, like if the kids want to come in, like they could buy, like if uncle dies, can they buy them out, or like there's like different ways to like write that?
Yeah, and those are the things that every like the two partners would have to sit down with the attorney and say,
Okay.
okay, we want to draft a buy sell agreement, or in these different scenarios. If one was to get a divorce, what happens with the spouse? Like, are they going to come and fight? Are they going to come and try to take the business away? And those things all have to be drafted in that buy sell agreement to make sure that every scenario, as much as possible, is covered, so that if those scenarios end up happening, then all the partners know exactly what to expect and how to go about it.
Yeah, definitely. The most technicality is in the getting in a court, getting in agreement with a lawyer specifically. The policy part is how you structure the policy to do that, but it's not that complicated. Once they get that in agreement, how they gonna manage the percentage of the company. So then our job would be to structure the policy the way is better for them. Percentages, and who's gonna be the beneficiary, how much are they gonna pay, who's gonna pay, and even well, I don't know if that you're gonna ask that question later or not, but they can put them as tax deductible, but that's
Okay.
something that they need to talk to the
To their tax
to their tax
professional.
professional. But it can be done, yeah, that way too.
Okay. And then can you guys elaborate more on the taxes? Because I always hear, like, I'm not the, life insurance or the tax professional whatsoever, but I go on social media and I always go scroll down. They're like, hey, you use the life insurance for your taxes. Did you know in taxes you could save on, if you were to buy a key man insurance on one of your employees, you could save this much money. And it's like, like I see all these ads on Instagram. Can you guys talk a little bit more about how taxes influence life insurance policies?
So it really depends on the type of policy that you buy, and obviously this is something that each person has to do their due diligence and take it to their tax professional
Hmm.
and figure out which deductions work. So, for example, let's give the example of a keyman insurance, or a buy sell agreement that's funded through a life insurance policy. Those policies could potentially be a tax expense on the business pays the monthly coverage for that policy, and then that can be then later deducted as an expense of the business. And then with that being said, for example, if you do have like a partnership and they each buy life insurance on each other for the buy sell agreement, those can be possibly deducted. And obviously take this to, I always tell people, and we always take people, obviously we're not the tax professionals
Yeah.
either, so always talk to your tax professional to figure out how the deductions would work. But if it's an expense of the business, then it can be deducted.
Yeah.
Okay.
Yes, because we're not allowed to give advice in that
Mhm.
area because or the for the license and everything. But definitely, a tax professional can tell them what to do, how to structure that policy for the benefit of the company and for them tax wise.
And usually when buy sell agreements are done, it's almost like a cooperation or a teamwork between the attorney drafting the
Yes.
buy sell agreement, the tax professional reviewing how that is going to affect the taxes for the company or for the personal business of that person, and then us coming in and structuring those policies to make it work with everything else.
Mhm.
Yeah, that was going to be my next comment. It sounds like whenever you're going to draft up this policy, you need to have your broker, your CPA, and your attorney, all three sitting in the table.
Yeah.
Yes. Hmm. Correct.
And I don't know if we got cut off, but
If first,
are you there still? Anyways, I'm just gonna keep talking in case we are. But basically, yeah, you have to have every person in alignment to make sure that it's done correctly, and that the policies that are going to be funding the key man or the buy sell agreement are correct and in accordance with everything else.
and not
I'll
oh
say.
is out.
I think she got kicked out. I don't know if we're alone. We're
I don't know if
by
we are.
ourselves.
Yeah, but
But well, let's just continue.
yeah,
Hopefully, she'll
if you
kick back
continue
in.
listening, also, it's not necessarily have to be the attorney, the tax professional, and us on the same table at the same time. I think the beginning of that is to go to the
Attorney
attorneys
drafting
to
it.
structure how they're gonna get an agreement to do that. After that, they can talk to the tax professional to see how they can benefit from that, doing the monthly premium and everything. And then they tell us what they want. So we structure the policy, if it's a term policy, if it's a permanent policy, how long it's going to be, what is the amount of
Right.
coverage they need. We do a discovery call with them or
Mhm.
sitting down. And after that, we decide,
What
what
works
is
best.
what works best for them. So that's the way we should
And
do
that's
that.
also pretty much the same with like key man insurance. Say for example, you have a um say for example, you were going to have, like, you're the main person or you're self-employed and you are the main breadwinner, you're the main person of your insurance, of who makes the money basically. Then at that point, what you want to do is you want to set up a key man insurance so that if something was to happen to you, hi, you're back.
I am back. The
Okay.
internet went out. Thank you. I was
No
like,
worries. We kind of went into the key man insurance
okay.
a little bit, and we did answer those questions about what you were talking about. So with the key man insurance, it's pretty much the same thing. If you are the main person on your business or you're self-employed, and something was to happen to you, let's say you come down with a cancer, stroke, heart attack, something like that, or you become disabled, completely disabled, like how does that work? So you can set up key man insurance on yourself, or on a very key important person in your business, to be able to for the life insurance to kick in, or if something unfortunately was to happen to that person, they pass away, the life insurance policy would kick in for the business and help fund the business to maybe hire someone else, or if the person's disabled, then kind of help out with that loss of income. Say it's like your number one top salesperson, and then they become disabled, or they come down with a heart attack, stroke, cancer, something like that. Then the life insurance policy can come in and kick in and kind of offset that income that that person was bringing in, and help the business to continue to work while that person
and
recovers. Or
and also to give you some ideas, also because it's a different industries, right? In, let's say, in construction, your foreman, it can be a foreman that is the leader of the whole crew. It can be I don't know, a framer. They have their framer group, the leader of the framer group. It can be a layout crew. It can be I don't know, the guys that put the pipes or electricity. Every industry has the key man. So it's important to have a coverage to the person that is leading the group, because something happened, like Zaira says, um, is gonna affect the production of the company,
the
the
finances,
finances,
basically.
right? So that can offset that economically, that problem also. And also comes with living benefits. I don't know if we're gonna talk about that later, but yeah, it's important also because yeah.
Yeah.
Yeah, well, let me ask you. So, what happens if you get a key man insurance on your top sales producer, and then they decide they move somewhere else, and they I don't know, they will go work for another company? What happens to that policy?
So then the term of that policy can end at that point. I mean, you set up a policy. For the most part, um, Keyman Insurance, depending on the type, you can either set it up as a term policy or set it up as a permanent policy. But
And
if
I'm
that
sorry to cut
person
you
was
off,
to
but
move to
can
another,
you explain what like term and permanent policy is?
yeah. So term is basically for a time period.
Okay.
Say 10 years, 15 years, 20 years.
It's gonna be terminated, yeah.
And after those 20 years, the policy is done. Or permanent is a policy that continues on until the person passes away. Say, for example, for self-employed people, they are the main person that brings, say, like a plumber who works for himself. He can set up a keyman insurance on himself, and it could be an actual permanent policy because he knows that he's going to be in that business forever. And that permanent policy can actually help him not only with the death benefit should something happen to him, and the living benefits if he becomes disabled, heart attack, stroke, cancer, something like that, but also it can accumulate cash value for the business so that he can use that money here and there, borrow against the policy, and use it for the business if he needs to.
Another way to put that example is like term insurance is like when you're renting in an apartment or something. You just renting for a period of time, and once you finish that period of time, you leave the apartment or the house that you're renting. Nothing is yours, but you use the benefit when you were there. Compared to a whole life insurance or permanent insurance, you are buying the policy. So that's why it goes whole life, because generates cash value, like Sarah just says. So it's like when you buy a house, you are getting equity of the house with time, and that equity you can use it. This is money that you
That's
can
good.
use for different things. So that's just to
Good
give you.
analogy.
Yeah, no, that makes it easy to understand.
Mhm.
Um, and the second note, what is, let's since we're brought up living benefits, what are living benefits?
So, living benefit, do you want to go with that one?
Well,
Or?
living benefits is that you can use that policy, part of the policy, while you're alive, in case that something happened to you. Well, let's say.
Like what we mentioned earlier, right? Like the heart attack, stroke, cancer, or
Mhm.
maybe like you're disabled for a year or two, or maybe even permanently.
God forbid that. I'm sorry, I interrupt
Sorry.
you. Continue.
So then that policy, you can get part of that death benefit of the policy while you're alive to offset those costs. So in the instance of, say, a permanent disability or a temporary disability, say 2 years, 3 year disabled, you're actually looking at maybe like a monthly income that the policy would give you. And say, for example, if that person unfortunately was to come up with like a terminal illness, then you can advance that and they can't work. Then in the case of a business owner, they can pull from that life insurance part of the death benefit to use it to offset costs while that person's still alive.
Mhm.
Okay. Yeah, that's what I've heard. I've heard that, let's say, God forbid, someone were to have cancer and they have $1 million policy. Let's say someone like me, someone young, you just unexpected, you don't know. And if they've had, I believe that you just have to have like 10 days with the policy, or I forgot, there's like a specific number that you have a certain amount of days with the policy and you could pull out the living benefits. But if you have like $1 million policy on yourself and you were to get cancer, you're able to get a percentage out from the policy to use that for your to take care of yourself.
And it also depends on the severity of the
Mhm.
case. So whatever percentage you're able to pull out. So once the say there's a cancer or you come down with a stroke or something like that, then depending on the severity, the insurance company is going to look at that and then figure out what percentage is going to be allowed to be pulled out of the policy while that person's still alive.
And also there's difference in that living benefit money that you get. If it's like a terminal illness that you have the doctor diagnosed you with less than 12 months,
Yeah, to live.
in some cases 24 months of living, the person is not going to live more than that. They get a lump sum of the policy. Let's say they have $1 million policy, they can get up to eight
I think it's
hundred
like
thousand,
80%.
900,000, all depends on the company. But so in other cases, it's a critical illness, or you're gonna live for a long time, but you cannot work anymore. You cannot do two of the six important things like get rest or eat or take a shower.
Shower,
You need
things,
help from
someone else.
someone else, and then they're not gonna give you a lump sum, but they're gonna give you a monthly part of the policy, like a $5,000, $6,000 a month for the person to help, in that area to cover the cost of that. So it's a different ways that they can benefit from this part of the
The living
policy.
benefits.
Hmm. Hmm.
Well, that's good to know because I'd say like 50 years, down the line from now, I'm going to be 81. And let's say, like if I need assisted living or I need help, people, showering me or taking care of myself, then with the living benefits policy, I'm able to pull out money. Let's say I have I don't know, $1 million policy on myself. And then I still continue having that policy. I'm able to use within that policy.
It's a good point, because is this also is another plan. Pardon me, is another plan that got names
It's called
long-term care that you pay separately, is another policy, specifically for those times,
instances.
instances. Yeah, when you're
Mhm.
older, they can pay for the nurse to help you, and that you can use this policy also for that. So it plays that role too.
Or if you get like a permanent insurance that is accumulating income over time, yeah, when you get to that age, if you get in that situation, you can actually borrow from that policy and use it for the long-term care.
The cash value,
Okay.
right?
The cash value, you can pull it out, and depending on how much you've accrued, a percentage of that you can use it monthly or whatever for long-term care. You don't necessarily have to get the long-term care policy. There's different ways to work things out, and that's why we were saying from the beginning it's very individualized to each person, because it has to fit, first of all, their budget, and second of
Mhm.
all, their needs. So whatever works best for them, that's where we try to strategize. That's why we're called the financial architects. We strategize to figure out what type of program or insurances work best for each person.
Yeah.
Okay.
What it
And then say
makes
like what advice would you have for someone that's 48 years old? He it's a he's a male and he's 48 years old, but he doesn't want to get life insurance because he's like, Rocio, I smoke, I drink, I'm not in the best healthy conditions. And, honestly, like, I don't know, like, if, maybe I have 20 years left, and, my kids are grown, but I'm not going to get life insurance because no one's going to cover me. And at least that's what he has in his head because he's been told that they don't cover smokers and drinkers. So what advice or what policies are out there for people like him?
Well, there's different companies, and they have their different type of underwriting. I have clients that are, they they have their illnesses, critical and chronic, and they are got accepted for a policy. The only
Mm,
thing is that I think the coverage is not gonna be too high, but definitely he can get a life insurance. Obviously, they're gonna have to go to full underwriting. They have to do a medical examination
Examination.
and everything to make sure what type of coverage they can give them. But yeah, he can qualify for.
There's
There's a
always
smokers policies
policies.
also that they give them 3 4 years to. If they decide to stop smoking, they continue with the same premium as a regular policy. After that, if they never stop smoking, then the
They
price
adjust
they adjust the monthly premium, for to see
for the smoker.
for the smoker. But there are some companies that they can definitely qualify him for a policy.
And the good thing about our brokerage here is that we have access to maybe over 40 different types of companies, not just one, or we don't just write one per, but it also depends on the situation, the condition, the medical situation of the person, the age, and then we are able to submit to figure out which company has the best products for that person.
Yes.
okay.
Mhm.
That's good to
There's
know.
possibilities. Yeah, it is. It can
Yeah.
be done.
I mean, I always tell people like, having coverage is better than having no coverage, especially when it comes to your family. It's not like you're driving a car, you're the bare minimum liability or just going no insurance because the car is replaceable. You yourself are not replaceable. Once
Correct.
your life is done, it's done. And the
Correct. You're absolutely
unfortunate thing is that it just happens. It's just instant. Oh yeah, that might not be instant, but your family is the one who's going to be left alone, especially if you are the person, the breadwinner or one of the people that influence the economy. Even, um, there's been a lot of. It's really sad when you go on Instagram or Facebook and you see all these GoFundmes, right? And it ranges, right? Because you see from little kids to, people who are of age, but it's very sad to see people in the middle, who are like, who you wouldn't think they would be gone, and now their family, their wives are out there collecting $10, $20 just to fund their funeral, not even think about all the debt that they might be accumulating from that person.
And that is always the case, and it kind of it's very sad to see, because not only does the family or the close people have to deal with and grieving the loss and the emotional roller coasters they're going through, but now also on top of that they have to figure out how the heck to pay for the funeral, how to collect money for this, and how are they going to pay the bills. So we have an instance of someone we know that unfortunately a few years ago passed away. He had his own very successful cleaning business, and he had his mortgage, and then he had some Airbnbs, but nothing was protected.
Oh no.
And unfortunately, he passed away, and the burden fell on the wife and their 20-year-old daughters. I mean, they were in
Wow.
their 20s. And now it was more of how are we going to pay the mortgage? How are we going to continue with the business? How are we, because he was the one pretty much handling everything. So those types of situations we never really sit down to consider, but we have it all down. You don't have to think about it every single time or every year, but once you have it, you sit down with someone, you think of the worst scenario and what could be the best outcome out of that to protect your family or your loved ones or your business. And then from there, you have the peace of mind. You don't have to think about it again until maybe your situation changes or your business grows. You might need more coverage, things like that. But you do it once and you kind of just continue to make those payments to have the policies activated, and then you have that peace of mind that if you're one day not there or something happens to you, that everyone else is protected.
Yeah. And also at those moments, $50,000, $40,000, $30,000 for final expense policy or for funeral coverage is better than nothing. You know, we all wanted to have $1 million policy, half a million, 200,000. But in that moment, it's hard for somebody to come to you and say, give you a check of $20,000 to cover your.
Nobody will do that.
And then it's hard. So what I tell my clients is that 10,000, 20,000, 100,000 is better than nothing. So
Hmm.
get something. It's gonna help.
Yeah. I think you guys had told me last time we met that there was this one lady that you guys got coverage, and then I think her husband passed away. And it was
Oh,
just like,
Oh yeah, yeah. That's another thing that people think. People say, if I save all this money in 5 years, 10 years, I will have $20,000 to cover my funeral. I will have $50,000. But the bad thing about us humans is that we don't are disciplined to save. That's one thing. The second thing is that we never gonna know when something's gonna happen, right? So this client, I sold them a policy. I put them in a good plan for the couple, and they were 65-year old. It was in 2020,
during COVID.
December during COVID. January 2021, their sons called me. My dad is in the hospital. He got COVID. He's intubated. He's back. How the policy is gonna work? I said, well, the policy is there. If he continue, he paid his first premium. So sadly, he passed away. So
oh,
he made just one premium, and
oh,
the funeral cost $25,000. The wife was very happy and grateful because we kind of like told them it's better to have something because they want to have a big policy, but also because of the age,
They would
the cost is gonna be it was gonna
high,
be
too high.
higher. So that's why I tell people you never know when it's gonna happen. You can pay for 5 years and nothing happened, but it's okay because you have a peace of mind.
And actually, he made the first premium payment. Then he went in
Yes,
the hospital. He passed away. They paid the death benefit
and they gave
within the 30 days, and then they returned the premium
the
he paid
premium.
too.
They gave the
wow.
premium back to the family. Yes, and I was like, wow, this is
Awesome.
it's a bittersweet because at the same time you feel sad for the family for the person, but you have
And now you have
yeah, piece of.
most of the family covered because they saw that and they're like, oh my gosh, we really need to take care of ourselves.
Yes,
And then the
their
cousins,
son, their
the
cousins,
daughters.
everybody is now covered. But
Yeah.
it's important to think that way. That even if you save, you never know when you're gonna put
Something's
together
gonna happen.
put together 20, 25,000, 100,000 to cover your things and your life.
Yeah, I mean, I'm pretty sure as a life insurance agent, you probably feel really bad if you were talking to someone and it's like, man, I forgot. I was going to follow up with him, and then let things happen, or I just never really pushed or asked or advised him to do this, and then now he's gone. And
Mhm.
Yes.
I've seen like stories like that on social media, and it's
Yeah.
really heartbreaking. I'm like, wow, like because
Like
it's true.
guilt.
And yeah, I have so many stories. I don't know how much time we have, but I'm not gonna tell too many. But the important, let's say this couple also, I sit down with them like 4 years ago. At that moment, the husband didn't want anything. He was healthy, was like 60 years old, and the wife, she wanted to have some coverage. Well, 2 years after, they call me. she called me that her husband was in a hospital or already almost to pass away, and if
Wow.
I can help him, I couldn't help him because he was already. So they keep him in the hospital, or they move him to some place for 6 months because they didn't have the money
They kept them at the
to
coroner's
mm,
office for 6 months because they had
yes,
no money because the guy ended up passing away.
yeah, he passed away.
So but they couldn't pay to get him out so they can do the funeral.
And she told me, you know what, Miguel, I should get that policy, even if he didn't wanted to do it 2 years ago, because he was healthy, both of them. And then, yeah, it's sad to
And when
hear
it
that.
comes to maybe spouses, oftentimes we've seen that one of them is more stubborn than the other. So one wants to do it, but the other one doesn't because they don't really appreciate, or sometimes, like, unfortunately, like in our Hispanic community, you got the macho man who's like, no, I don't need to do this. I can handle them. They can do whatever I'm not going to be here, so I don't care. But really, like, it would be a great thing to leave your family with at least some sort of peace of mind, to let them know that if something was to happen to you, or if you become disabled, there's some sort of additional income. Social Security, it is not going to be enough ever for a disability,
I think they give
and
$255 when somebody passes away, the Social Security.
Hmm.
it depends on
255.
how many points
Yeah.
I think they have, and but it's never enough. So if you have an additional source of monthly income or something, like if someone becomes permanently disabled, then you know that that policy is paying on helping you get some sort of additional income than
Yes.
what Social Security could give you.
Yeah, no, you're right about that. That's why we're having more people, even after they retire, they're still working because that, even with their 401k, Social Security. I mean, we everybody knows that costs are
Cost of
up.
living.
Yes.
10 years from now, the chicken or the apple is going to be $20. It's just because that's just like
Yeah.
how life is, right? Everything as you go forward, everything costs more because the milk, it doesn't cost as much as it does like 20 years
True.
ago. When you look at
Yeah.
the
True.
prices
Yes.
and all of that,
Uh-huh.
so it's very important too that um, that people take that into consideration because every day that we go on, it's just a day that we get older. Day we get wiser too. But
Yeah.
it's also like, especially if you already have a family or thinking about forming a family, it's very important to think about your legacy.
Mm-hmm.
Yeah, and especially also for like young entrepreneurs, you know,
Mhm.
who have their own business. That's their source of income for the family. Maybe they have a stay-home wife, or the wife has a stay-home dad. And when you're young, when we're young, we don't even it doesn't even cross our head that something could ever happen to us. And unfortunately, not long ago, a few months back, we know that we came to find out that someone like my age, in the early 40s, passed away and left two little girls and a husband.
Um,
And it's like, oh my gosh, like we never really think of, or we don't ever really know when something's gonna happen, life's gonna happen, because it does. And then our own personal stories, we don't have time to go into all that detail. But we've been married for almost 27 years, so we've gone through so much stuff, good and bad, like a lot of losses. And if back then we would have known what we know now, those struggles that we went through would have been so much
Correct.
easier to deal with. And because he got injured, he practically became disabled in his arm. I mean, there was a lot of things that we could have done to offset certain issues and circumstances that we went through. But because of ignorance, or because of thinking nothing's ever going to happen to us, we pretty much lost a lot of things, and it could have been so much better. So that's one of the things that kind of drive us now to help other people, because we don't want other people to go through what we went through.
yeah, yeah, because you guys have been through the thick and thin, right?
Yeah.
And you guys don't want. I mean, you already went through the bad, and if you guys could help a family avoid, going through the same thing and having
Correct.
less money,
Mm-hmm.
better.
Yes.
Yeah,
Mm-hmm.
for sure.
Correct. Correct.
Yeah, but We have, yeah. So, guys, if there's any questions or comments, feel free to pop them up. I'm gonna go onto my Instagram right now to see if there's anything. I thought I had it up, but I didn't. See if anything's coming up. Um, so we are going to also be hosting these lives every month, and it's gonna be different topics. And if you guys have any questions or like say, hey, Rocio, I want you guys to talk about, I don't know, baby IULs or talk more about, we're gonna have a every month's gonna be a different topic. But if you guys have anything in specific, go ahead. We love talking to our audience, making sure that you guys get the information that you want. So if there's any comments, any topics or anything you want to discuss, feel free to shoot me a DM, comment on this live. That's on LinkedIn and Instagram. It will also be on YouTube this weekend. So anywhere you could reach me, go ahead. And then I'm going to make sure I tag Zahira and Miguel. But Zahira and Miguel, what is the best way to get a hold of you guys?
So we have our website. It's pivoralfinancial.com.
Okay.
Or if not, our personal cell phone numbers where we that's where we handle pretty much everybody that calls in, and we can give them to you if you want to post them on the notes and
Okay.
stuff. But we can, I can give it to you right now
Yeah.
online, which is 909-268-1598
1598.
or 909-952-1138. And then pivoralfinancial.com.
Awesome. Well, thank you so much for joining me. And I'm excited next week to do the Spanish one. So hopefully I don't get stuck and it takes longer than what it is.
You
I'm
will.
just
You'll
gonna
do
go. I'm
good.
gonna hold through it, you guys. So voy a hablar ahí mochado, Spanglish, whatever it is.
It's okay.
Yeah.
We're gonna go through.
Remember that you're in California, so California we speak
Spanglish.
Spanglish
Yeah,
and
Spanglish. Well, thank you
yes.
so much, guys. I really enjoyed you guys, and I hope you guys have a great rest of the week.
Thank you,
Thank you. Thank you
Rocio.
for having us.
Thank you.